What's up, family? Welcome back to yet another valuable video of news trading. This is episode number 3 where I teach you on how to trade news. Okay, so many people have been asking for this episode and it's about time that I actually do it. So if it's your first time watching, make sure to subscribe if you do like what you see at the end of the video. Okay, so the first thing that we need to establish, as I've already established it in this series, that the app you're gonna be getting every detailed information about news events is investing.com. By the way, we're not sponsored by them of any sort, but I do have a link just to make it easier for you to find it. But if you search on your Play Store or App Store or Google, whatever, and you just search investing.com, you will find it. I'll put the logo here that you can familiarize yourself with it. Okay, so once you've done that after this video, now there are a few pointers that we need to discuss on how to trade news events. First of all, I just want to well acquaint you with the right terminologies. I see you all guys commenting below and you don't really know the right terminologies. So when it comes to terminologies, we have what we call fundamentals. Fundamentals is a style of predicting or forecasting the market based on economic indicators such as your NFP, but we look at the long-term effect of it. So normally they will use the database released to predict, and I do also teach that within my mentorship. So if you're interested in that style of trading, it's also available as we go deeper onto it, right? And then when we're talking about news trading, it's a subset of fundamentals whereby we're looking at the short-term effect of that economic indicator, such as example your NFP. And we normally try, by all means, people use various tools in order to predict what the numbers are going to be, because the numbers have a direct impact on the volatility at that actual time it's released. Now this takes me to the next point, rather, or the most crucial point of this video. A lot of you guys are asking about or confused about is your entry or your time of execution based on the economic indicator. So let's say, for example, in my local time here in South Africa, whenever we get NFP, it's around about 2:30, right? So whenever that takes place, I want to execute my time, and I'm going to advise you to execute your trade rather around about this time. So around about 14:29 and 30 seconds gone in, I would now execute my trade. So that will write 14:29 30 seconds. That's when I would execute my trade. Remember, many of you want to execute your trade 2 minutes, 1 minute before. Why I say do not execute it 1 minute before is that the spread kind of wildens up, right? And it plays around with your trade. So you see the market going into big losses way before your trade can actually go or move, and it puts your entry quite further, as they're allowed to kind of widen up the spread during news. Most brokers do this. We'll discuss later in the next episodes about which broker is right, but most brokers will tend to do this. So the best way, get in 30 seconds. 30 seconds is a fair chance, so that other brokers should not block your trade whatsoever, as they widen up your spread in that sense. Okay, so 30 seconds before the event takes off, that's when you can execute your trade. Okay, now given that we're talking about entry, the next point I want to talk about is your stop loss and your take profit. Well, the best advice that I'm going to give you as a 7-year trader trading news, I've put stop losses, I've put take profits, but the best thing is either two things, right? I'm going to give you two ways. So the best thing is to put your stop loss a bit further from your entry. So let's say 100 pips, a bit further. Not that you're willing to lose 100 pips, but this is a room for spikes, because news volatility, it can actually spike in the opposite direction before it moves in your direction. So leaving that room, not putting your stop loss too close, can actually just save you from a loss. Does it make sense? Now, there are two things that I teach in my mentorship that I want to educate you now on. There are different types of economic news events impact. So we have what we call trend following news and we have what we call pullback news. I'm not gonna cover them here. If you want them, you gotta purchase the mentorship. Okay, so please don't ask about it in the comment section. But what simply means is that there are other economic impacts that come about and will follow the trend. So when you have such, or when you predict a news that follows the M5 or M15 trend, or the the H1 trend, then you can rather put your stop loss above structure. So let's say it's buys, for example, you can put it below the higher low, okay, given that it goes with the trend. If it's bearish structure, you can put it above the lower high, okay, given that it's following structure. But let's say it's a bearish trend in the market, you're predicting that the economic event is gonna give you buys. The best way now, that is called a pullback news impact, right? So the best way, it will be put your stop loss as further away from that structure. But because what ends up happening with pullback events is that they can actually get to reject, because the market at the end of the day is going to respect structure as far as technicals is concerned. It may want to push the market, take liquidity, and let's say mitigate a previous supply or demand, whichever trend it is. So again, now I want to go to the second method. It's quite not conventional in the sense of trading or what others advice in terms of trading, but this works for me and I want to dish it out to you. So I don't put stop losses when I'm trading news, but the catch comes in, right? I use a smaller lot size when I'm trading news. For example, if I'm gonna be willing to lose a trade, it shouldn't dent or damage my account because I've not put a stop loss. Therefore, I use a smaller lot size. So this comes back to the mentality that I want to cover at point number 3, which is the psychology, but we'll get back to it. So I don't aim to triple or double my account whenever I trade news. It's just like any other trade that I would have taken when I am trading technicals, for example. So the best way to approach this is to not put a stop loss to save yourself from whipsaws. So people don't know what a whipsaw is. A whipsaw is a type of news event that comes about, or it's a behavior of an economic news event that comes about on your chart that moves the market up and down. So it can move it up and down. So it doesn't hold a candlestick, it doesn't hold a direction. It can be as fast as lightning when that happens. So when that happens, sometimes it can actually start going in your direction after it has went up and down, then it starts going in your direction. I do post a lot of videos whenever trading news. People get scared. Oh my god, how can you do that? No stop loss, and the market went down by 20 pips and then went up. I know how much I've risked in comparison to the size of my account, that even if I lose 100 pips, it will not even dent the account. So if you can approach it like that and stop trying to triple your account each and every time, this will save you guys a lot. And this goes back to the misconception about trading, or news rather, to say it's a style of trading that you can sort of triple your account or double your account every time you trade, which is not the right way, because that is it's almost like gambling. You and a betway person are no different. You and a person who plays lotto are no different, right? You gotta approach it with risk management. You gotta take it as just another opportunity. So if you're gonna be a news trader, approach it with the right mentality and avoid kind of risking everything in your account. If you cannot afford to lose it, then why go all in, right? And of course, the next point there is psychology. A lot of you guys, people on internet and on TikTok, they've really damaged your mind when it comes to news trading. Approaching it with the right heart and the right mindset will save you a lot. So here's psychological points that you gotta take. News trading is not something that you use to double your account. It's just another style of trading to make profits from the market. So you gotta go 2 or 3%, whatever risk appetite that you can afford. So the key word there is afford. If you can afford to go all in, which is irresponsible in a way, but if you can do that, then it's fine. But if you're somebody, you know, if you can lose this money, you do not have another money to fund your trading account, risk something that's reasonable that will not dent your account. right? So that is the psychology that you gotta build up. In terms of approach, I have a rule to say, if I'm on, or I'm about to trade news and I'm not sure about the direction, why force the trade? So many of you have seen that you do not want to miss a trading event. There's this hype up. Stop doing that. If you're not sure about the direction based on your trading method, trading strategy, then don't force the trade. This will only result into a lot of disappointment, especially when you blow your account. You'll be quite devastated and that regret feeling. So it's better not to regret rather than, so it's better not to kind of go out and break that rule. So that's one thing that you can do just to protect you in terms of how to trade news events as far as it's concerned. I believe I've shared so much information. I'm not sure how long this video is, but again, let's just go on to the pointers. Number one, you want to find this at investing.com. Number two, the timing is 30 seconds before the stipulated time on your investing.com, as I've made the example. 3, your stop loss, you can either no put, no stop loss, but that will equal a smaller lot size, or again, you can put the stop loss given, you can put a stop loss given that you are trading a news direction that's with the trend, that goes with the trend. Okay, it's more, it has lesser chances of taking liquidity. Okay, and of course your psychology, protect your mentality. Do not risk more than you can afford to lose. Again, if this was your first time watching this video, make sure to subscribe, like, because more episodes like this are yet to come. God bless you.